Good morning, everybody. This is Patrick MontesDeOca with the Equity Management Academy live trading room, live streaming from Discord. Let's jump right into the market here. We got some very exciting markets this morning with gold up about 220 here, trading last at 1896.50. Silver up about 31 cents, and it's trading basically in the 28, the last is 28.04. We seem to be moving up into this reversion that unfolded last night as we came down. Basically, if we take a look at the monthly codes, or the monthly average price of 1864, we came right down into this level here on the 3rd at about 6:30 p.m. and reverted right back from there. And what we have accomplished right now is about a 50% Fibonacci retracement, and the target for this monthly is about 1953. If we take a look at the daily and the weekly numbers here, you can see last night the market came down to activate the 1890 level, which was the buy one level daily, and also the weekly 1890 was a buy, was a bullish signal, a buy signal, activating the bullish price trend momentum. We got a little bit of profit taken here. Obviously, this is what you're supposed to be doing here when you buy it from the low of 1890. Last night we came down very close to it as well at about 4:15 a.m. About 2:30 a.m. it looks like it activated a buy signal, and the target was just completed now of 1896. So if you're long and you took the signal and you long the future, guys, in my trading room, take profits on the futures. If you did not trail the stop, take profits here as the market is in the 50-50 standard deviation zone, which means that it can chop around a little bit here for the time being. On silver, we got up to almost the sell one level daily of 28.16 by pretty much making a high of 28.14. And what you see here is that the market made this nice rounding bottom here by trading above the daily average of 27.74. It activated a bullish price momentum. The target for that signal was 28.16. If you entered the signal, it also activated a weekly bullish price momentum with a target of 28.16. What I would suggest, if you're following this, that on the futures, obviously you took profits, continue to hold on to your core position, your long-term core position, and let's see if we can now accomplish the weekly target of 28.72. Of 28.72. let's watch the market here for a little bit and see what it does at these levels here as the market begins its first hour of trading. I would like to share this report that we published in the Associated Press this morning, June 9th, at about 12:30 a.m. We published the 10-year note gives a buy signal for gold and silver. Regardless of the inflationary rhetoric, we hear the 10-year note is down to 1.53. Interest rates are not going up on the short end of the market, which is bullish for gold. We are seeing shortages in almost every sector of the economy. Food prices are also rising. The key is how long it takes to replenish the supply chain. Fundamentals. Regardless of the inflationary rhetoric we hear, the 10-year note is down to 153. Pundits and experts are pontificating about interest rates, but if you look at the 10-year note, we are down about 4 ticks. Interest rates are not going up on the short end of the market, which is bullish for gold. That is what the gold market is beginning to react to. At least for the time being, the pressure on interest rates appear to be easy. It appears that inflation fears are a short-term aberration. We are seeing shortages in almost every sector of the economy. Food prices are also rising globally. The key is how long it takes to replenish the supply chain and meet the pent-up demand as people move back into the economy. On the left of the chart here, are the daily VCPMI signals. As we published this report yesterday, we provide signals to our subscribers the night before for the next trading day. We had a volatile week last week, but it provided a huge opportunity for traders to take advantage of this collapse. The coronavirus triggered the collapse, which is extremely bullish for the precious metals. When the virus came out, we exploded to 60.91.70. We did not know yet then. We exploded to 2,089. This was an error I just caught, and we did not know yet then what the damage would be for the global economy. When the virus hit the market, it met specific targets, and it gave the VCPMI the opportunity to tell our subscribers to lock in profits. The VCPMI is a contrarian indicator in that it trades the extreme levels of the supply and demand. The red levels in the chart represent an area of resistance. These are pivot points that have been activated by the VCPMI to show the extreme levels of the supply and demand in red and in blue. Today, as we write the report, has met the targets for the daily signals. The market tested the lower levels of support in this 1890 to 1877 level. Let me come back here to the market as I want to pay attention to this market up here at these levels and see what basically we're looking to do here at the average price. Little profit taken, and this is what the AI suggests as it gets closer to the target, 28.14 and a half. The target was 28.16. That's pretty close. So what I suggest you guys to do, obviously, to reiterate the stop methodology, is that you don't use a straight stop. You use the level below when you enter the trade, and you trail the stop when the market goes in your direction, so that if the market does revert and it stops moving or going up, then if you trail the stop, then you can protect the majority of the gains that you made on this trade. If you have multiple positions, specifically, this is a great way to trade the multiples. As you can see on the gold here, we took profits as well and not quite followed through with the momentum to the upside above the average, and pretty much experienced a bit of a profit taking here back into the average zone of the daily and the weekly. For right now, the daily has gone neutral by trading below. The weekly is still on a buy mode. The daily signal of 1890 completed the target of 1896. Let's take a look at some of the derivatives here that seem to be on the green, on the positive side. GBTC has reverted, turned around from the levels that we saw yesterday. I believe that could have been the capitulation of this correction that we saw on GBTC. And you can see it's come down to an area of support, and now we got almost like a gap bottom, an island bottom making on the on GBTC, which is very, very bullish. The coin market is coming back from this correction that it went into, and it's in the buy mode. About 222, it activates a buy signal. So I think we might have found some support here on the virtual currencies. Let's come back to the report here a little bit. When we wrote this report, gold was in a fast market. We came down to 1892, and then pretty much reverted from that level up almost to the 1909 level that you see here, which is the variable changing price momentum indicator, sell one level. Then it reverted back down to harmonic buy trigger. This is a very, very strong signal when it came down to the 1890. Which matched the daily and the weekly. And so we commented that by coming down here yesterday that we expect a reversion to occur from here, and buyers should come in at this level if gold hits 1896. And that's pretty much what we are seeing here, what we saw yesterday here. Above 96, it changed the bearishness to an uptrend. And we recommended to maintain your net long positions. We have covered our short positions. It appears that the counter swing correction has been completed. The correction did not last long, which is a very bullish sign. And it appears that the market has, on the bigger picture, formed a little bit of a flag that you see here. And it's kind of a descending wedge or a flag formation, and the market is breaking out of that. If the market breaks through this, then we're looking at about 1953, which is the sell to level on the weekly that's activating. The daily signal is up to 1915, 1924, and the weekly target, which has been activated, the daily activating targets of 1899 and 1915. The thing I want to point out to you that I'm beginning to see, even just when I published this report, by the time it even comes out, sometimes we have seen already the targets being completed. And so what that's telling me is that we are entering a high level of volatility that is unprecedented. I think we want to measure that volatility accordingly, according to your profile, so that you won't be in a position to be on margin calls and have to readjust your position and liquidate your position. Make sure that you leave enough margin excess so that you can carry your position. This volatility is unprecedented, and I believe that the virtual currencies are pretty much dictating a new benchmark of volatility, which is unprecedented. In the history of these markets, or as long as I've been around, there have never been too many assets that exceed 200% a year, like Bitcoin is doing. And after watching the market here for a couple of years, obviously, you have to respect the interest and the demand that's coming into this market, because it's telling you something. If we're getting this kind of interest in a particular market that essentially is a replacement, in a sense, what appears to be for the US dollar. The virtual currencies, going back 10 years ago, the market was created because of the future prospects that we saw on the US dollar at that point. Particularly after the collapse of 2008, we saw that the central banks, our leaders, did not change the policies that essentially brought us to this 2008 recession. The debt has exploded since. Almost doubled since. And interest rates obviously are on the way down. They have been on the way down. If you factor in inflation, you got a negative nominal rate. A real rate of return is negative, factor in inflation. And so the money that is on the sidelines, the wealth factor, essentially began looking for an alternative to park their cash reserves. And so what we have seen is a whole brand new economy unfold from the crash that we saw back in 2020 in March. And the market, even the stock market, separated itself into a virtual economy, and it anticipated that this is where we were going to be moving into, particularly when the Feds agreed to that they will open up the printing presses and print unlimited amounts of money. And that gave the gold market the essentially momentum to explode $600 to 2,089, and factored in what appears to be the Feds allocating about 10% of GDP, which is about $30 trillion. It's a staggering amount. And now, after the high was made in the gold market of 2089, we have seen a retracement back down into what was made about 1675. That was a 61.8% Fibonacci retracement early this year, the low. We're up to now 1892. So we're up, a solid $200 from that low. And the market is beginning to pick up its momentum on its own, not when everybody on the internet and all these pundits are calling short squeeze, the Reddit crowd are calling short squeeze. None of that has worked. A tremendous amount of money is being lost by young traders. Reddit crowd, the Wall Street silver crowd, the young crowd, the millennials. Some that understand contrarian trading, that understand volatility, that are professional traders, obviously are taking advantage of this tremendous liquidity pool that's been created by this new mentality. But as you saw, the short squeeze didn't last very long. It went up to 30 and some change, 30, 40, and then it collapsed. Almost $7 from that high. So a lot of people that follow the herd got killed. And this is pretty much what the VCPMI prevents you from doing, is following the sentiment sometimes, which is following the herd, and it usually leads to some bad consequences for a lot of traders. Usually when the news is in the headlines, or you can take a look at the majority of the sentiment, is one way or another, it's usually an extreme that the market will do the opposite. And this is what the VCPMI does. It is a contrarian indicator to the sentiment of the market. So coming back here to gold, I think we got some to the markets here in Bitcoin. We got some major, I believe, moves taking place now after this liquidation took place on virtual currencies, and I think Bitcoin looks like it has found a bottom in here. So I'm pretty sure that we're going to be getting a lot of interest in this sector once again after uh, the slaughterhouse, so to speak, that took place here the last few weeks. And, I say to my traders here, if you can't stand the volatility, don't trade those instruments. Don't follow the herd just because everybody is talking Bitcoin or currencies and how many millions they made. You got to be careful that you don't follow the herd, in particularly the virtual currencies. Let the market dictate to you. Let the market tell you what those levels are. And as you can see, in taking a look at the weekly signals in GBTC, we have activated a buy 2 level, and we're in the process of activating a buy 1 level. And so it looks like the market has found support. And very specifically, the VCPMI tells you what those levels are. It tells you, like a GPS, if you want to go trading virtual currencies. We seem to have inverted here in the metals. Let me take a look at the current contract of August is now 1892.60, down about that $1.80. So, following the VCPMI, the market trading around the average is 50-50 standard deviation once again. The sell 1 level is 50-90 standard deviation. The buy 1 level is 50-90 standard deviation. So when the market came down to this level here of 1890, you got a mathematical probability that if the market activates the signal, which it did here, this was a 90% probability mathematically that we're going to go back up to 1896. Never got stopped out, and the target was completed at 5:30 a.m. And this is where you go neutral if you're trading in the futures. You can manage the derivatives and all the other positions accordingly, but we're talking about day trading in the futures markets. And so this is where we are. We are trading above the average daily, above the average weekly, and we've come down in that area that essentially is a neutral area now. So what we're doing here is basically just monitoring the derivative side of the market and allowing for the market to trade its supply and demand at these levels. If we get up above 1896, again, it's going to activate the bullish price momentum, and again, it will be bullish daily and bullish weekly. And the targets are for the daily at 1909, and for the weekly are at 1954. Continue to hold your long-term positions alongside here, and I will continue to update you through the day in the live Discord trading room. I'll talk to you later, guys. Have a great trading day.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our Variable Changing Price Momentum Indicator, VCPMI, is an automated AI trading system developed and tested over a decade. The VCPMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VCPMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VCPMI algorithm. The VCPMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VCPMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VCPMI? The VCPMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VCPMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VCPMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit EMA2trade.com for more details.